Okay, so this past week, boy, did we have an interesting week. Um, Started kind of benign on Monday, and then Tuesday we had a precipitous drop, which we'll see here in a minute when we go to the market charts. And then Wednesday kind of continued, and then Thursday and Friday, especially Thursday, we had this big, gigantic uh, up day, which finally we had some movement, but it really didn't move out of too far out of the box of where it's been for probably the last couple months. But it was a big earnings week. We had some negative earnings from like Home Depot and Caterpillar, and so those stocks went down. And then there was a lot of talk about the recession. It just was very negative at the first part of the week, and then obviously because of some of the economic data that came in or didn't come in, um, looking like the rate hike's going to happen. And then later in the week, we had First Republic. Looks like it's going to go under. I think there's some things going on in conversations with J.P. Morgan, but it was kind of eventful. But we kind of wound up in the middle, maybe at the top of the middle, as far as where we've been the last few weeks. But let's just kind of take a look at some of the data this past week. And, I've been tracking these manufacturing index. I think we kind of had a split decision from the week before. And the Dallas Fed Manufacturing Index went down by 23.4 with an expectation of 14.6 to 17. So it came out much worse. So we know the things are starting to deteriorate as far as the economy goes even more. Tuesday we had building permits came in pretty close to forecast, obviously down from the month before. The Case-Shiller home price, it was up 0.2% month over month, but year over year, 0.4% price increase. And then we had the consumer confidence at 101.3, which was a little bit unexpected. You could see they're looking at 104 to 106 on that. And I'll just keep mentioning it. This is the one. These are the types of things we want to watch when deflation, if it starts to rear its ugly head. And then kind of I don't know the surprise that month over month home sales being up that much, but we're starting to get into the spring, and there's a little bit more home selling activity. But new home sales did come in higher, so that is what it is. Mortgage rates kicked up. Now, next week I would expect it to go down. We did see more the 10-year go down some, so we'll see what happens next week. Durable goods were surprisingly up. Not sure what drove that particular number. And then the GDP that came out Thursday came in a lot lighter than expected at 1.1% when they're expecting between 2 and 2.3%. And then today, obviously, core PCE was the thing I've been waiting for all week, and it was a nothing burger. It kind of came in line for the most part, so there isn't much to really report on that. And then the consumer sentiment came in line, and that was kind of the week. It was there was a lot of activity, especially with the earnings, that really drove the markets. And next week we get Apple, so Apple will obviously be have a huge impact on the on what's happening. Now, if we take a look at next week, we'll see what we have. All right, we got the manufacturing PMI, which is important, still in contraction mode at under 50. JOLTS job openings expected to come in much lighter, 9.7, 9 point, well, they're just under 9.7. We'll see how that goes. Wednesday talked about mortgage rates. ISM Services PMI kind of continues to hold on pretty strong, 51.2. And then obviously the big news Wednesday is going to be the Fed rate decision, which I think it's a foregone conclusion. It's going to be 0.25%. I had hopes that some of these things with First Republic and there's a lot of weakness around with some of the banks, but at the moment they feel like things are covered. I don't believe it. Then obviously Powell's press conference will have a big impact. I think this 0.25% is already baked in. Then relief non-farm payrolls next week, unemployment rate. They're obviously forecasting much lower numbers now. 236,000 is the previous report, and so we'll see how that comes out. But I think obviously the big thing is going to be on Wednesday with what Powell says, and so far they're all coming out. All of them being the Fed board have come out basically said, oh, we're going to keep raising 0.25 point and do this, that, and the other. So we'll see how it plays. I think they're playing with fire, but that's the way it goes. Now, one of the things I did do this week is I found this U.S. investor sentiment, and this is the last 5 years. You can see how bad it's been since the beginning of really 2022. This is all of 22 and into 23. In February, we had kind of a comeback, but that's been it. I mean, we've been underwater for a long time as far as sentiment goes. And even this week with Thursday, I don't know when this survey's taken, but still down 14.37%. So people are still pretty negative, from that standpoint. Fear and greed index, we're still at 60. I think today and yesterday obviously helped because that sucker was going down towards fear pretty quickly after Tuesday and Wednesday with the drop that we had. And then, oops, I'm missing one. No. Oh yeah, the investor sentiment survey, 24.1% bullish, 38.5% bearish. That number has gone up on the bearish side, and the bullish side has gone down. So we're getting a little bit more negativity. But again, this was taken on Wednesday after things were pretty ugly, and I would suspect that by now we're probably back in this range here. Going to see what happens. So that's the sentiment. And now let's take a look at some of the kind of what happened this week as far as the markets go. Not sure why that happened. So, okay, Monday I said didn't really move a lot, went up a little bit, and then we had this, just very negative, a lot of just negative chatter going on Tuesday and then into Wednesday, and the markets dropped, and then Thursday we totally rebounded. I mean, those are two pretty big candles, and I mean that's a pretty big rebound right there. And then today, even there was a good follow up to it, new high here, but we still got a ways to go. We've got to clear some of these, like up to 34,349. 34.7 before we can start to say let's get excited about things. But the Dow Jones does look pretty good. I mean, consider that the all-time high here is 36,936. We're a couple thousand off right now, closer to 3,000. And then we get the SPY, and obviously it had same trait. Okay, so Monday went up a little bit, Tuesday down, Wednesday down, Thursday way up, Friday way up. So this is kind of the psycho market expect, but it didn't really move the VIX, and we'll see that here in just a second. But again, 480 is the all-time high. We sit at 415. We got a little movement up after hours here, 416.13, but we're not that far from the all-time high of 480 on the SPY. The Q had a big week. It's starting to clear some barriers. We need to clear up here at 334 to march our way up. And then, the U.S. 10-year started its way back down, which is good. We started the week, right here at 3.58%. Man, 0.15%. I mean, that's not bad. Like, we're looking to get under this number. We may have one more kicker up. We'll see what happens there. And then the DXY, which is interesting, not necessarily on the daily. We are hanging around this line, but look at the weekly. We've tried to get below this number here, this magical number of 105.57. Why that's significant, I'm not sure. But, we've broken through it during the week a few times. And again, this is a weekly chart. We've always managed to clear it by the end of the week. And that's kind of how the things are going with the dollar. Still on the low end for a while. Does it need to roll over for the markets to go up? I don't know. Probably. I'm watching more of the 10-year for what's going to happen. Then the VIX, again, crushed lower, all-time low, down to 15.77 today. And, takes volatility out. Obviously, that affects the options, pricing, a number of other things. But that's pretty representative that we're really in a bull market, which is just so bizarre after all the difficulties that we've had. So that was the market data. And then I want to talk just briefly. I talked last week about, technical analysis and, how I have a lot of problems with technical analysis. And if you're not into it, I think you should get into it to at least understand what it's about. I think it's important. Maybe not as important as other things, but I always look at it. And one of the things I've always had trouble with technical analysis is, the probabilities are that it's going to go up, and never could find any data on the technical analysis. And then I found this patternsite.com, and this gentleman's name is Bulkowski, Thomas Bulkowski, and the patternsite.com has some of the data. I'm not going to go through them all. He's got so many commercials and stuff on here. It drives me crazy as I try to go from page to page. But I did bring one up. There is something called a, bearish engulfing pattern. So these are candlestick studies. And if you're new to, if you're an investor and you're just trying to get a little bit of idea what goes on in the trading world, then, a bearish engulfing pattern, basically you have one candle that's inside another candle. And then, the question becomes, how often does that happen? And, according to Thomas Bulkowski, if you get in this case, a bearish engulfing candle, one that goes down, engulfing, a candle previous to it, then 79% of the time it goes down. And so, he's got a little data on this. Now, the problem I have with some of these, not necessarily the candlesticks, but, some of the other data that he quotes on his site here. Remember, we looked at the cup and handle pattern, and, it's basically, this, and then a handle, and that's the cup and handle pattern. And so how often does it continue to go up when you get this pattern? Well, it turns out that the data that he has says anywhere from, well, on average, about 64% of the time. So 64% of the time, we get it continues, it goes up. And somewhere between 52 and 75% in some other studies that I was able to dig up. And then we have other things like we have gap fills. You've heard of that before. I don't know that you'd find them on here. You might find, maybe not, just not there. Let's take a look at which ones do I know have. Oh, well, SPY does. SPY has some gaps. So look here, we have a gap between this day and this day. So how often of the time does this get filled? So gap fills are 86%. Now, it doesn't give a time frame for it, and it could be, years later. But from some other data that I've seen, most of them get filled within a few weeks or a couple months. Now we've obviously left a lot of gaps here. Got a gap here, got a gap between here and here. So there's a lot of gap fills, but he's quoting 86%. Now, at least there's somebody out there. Now, there's something else called let's see if I can see one on here while I'm looking. A shooting star. Oh, I'm not seeing one on this pattern at the moment. This is kind of it. It would look probably even more. Well, it may qualify. You usually have like a small bottom part here, body, and then the wick is very long, and that would be a shooting star. And then the question is, okay, so how often does a shooting star work that we're going to have a turn down? And it, according to Bulkowski, it happens 65% of the time it will go down. So if you're playing the odds on these things, then you would go with something like this. And then conversely, on the bottom of these, you would have let's see if I see one, a hammer. Well, that's what a hammer looks like. Now, typically you would find it somewhere down here, in this area. I'm not seeing one right now, but anyway, that's what it looks like. So conversely, you have a long wick on the one side and just a small body on the upper side. So, where buyers have forced things down. Now, that supposedly works 62% of the time, according to Bulkowski's data. So those are just a few things. When you're talking about win rates, it's not quite as bad as baseball, where, somebody that bats 350 is, superstar. You want to, you can still have that type of batting average, but you just have to win big when you win and have something less. But, these are indicators that, can be used, in order to make trades. And, I would suggest that you go take a look at this site if you're interested in this type of thing, not on just the candlestick patterns. There's whole books on these things that I've read. And some of them are, I use them as part of my system that I trade with. Are they 100% reliable? Well, from the data I just gave you, they aren't. But, 79% of the time, okay. Now, let me just say, as a final comment here, that, efficient market hypothesis says that this stuff is all wet, that it's just a waste of time. And I tend to agree to a point, as I mentioned before. And the problem I have with it is more around how do you measure how are people? Now, candlesticks are pretty obvious. I can my mind can handle what we're talking about with regards to the candlesticks, but some of the things like cup and handle patterns, and there's operational definitions. In order to come up with data like these, you have to have some operational definition of what a cup and handle cup and handle pattern is comprised of. In other words, how do you measure it? Because if I measure it one way and somebody else measures it differently, then you're not going to have consistent results. And so how does he get these data? I don't know the answer to that. I have not gotten his book, Encyclopedia of Candlestick Charts, where he has some of the data in here. But it's one of the only sources I've seen with all the data that we have. I'm shocked that there's only one one real concrete source that I found that has some of the data associated with this. So I'll probably be getting the book at some point. I've gotten different anecdotal pieces. I'm glad I found the website other than these stupid ads he's got on his site. I think it's useful if you want to kind of learn some things. Another useful site that you want to become familiar with. When do you get in a trade? Or even if you're investing, how do you want to invest? And I did a previous video about, buying or, selling a put at a price where you would want to get into a stock. So if, Eli Lilly's at $100 right now, let's say. I don't know what their price is. I know it's a lot more than that. But let's just pretend it's $100. And, that might be a little bit too rich. We seem to be at the top of a pattern, not at the bottom. And maybe I want to get in when it's $80, so I can put in a good till canceled order to purchase it at $80 if it ever got down to that particular point. Now, obviously, downside of that is, it could go to 50, but you buy into it on the downswing. But if you're looking at some of the charts, it could also set up alarms. There's a number of things you can do in a lot of the brokerages that are out there today. But again, I think this needs to be part of everyone's education, even if you're an investor, so you can ask intelligent questions with your, financial advisor or fiduciary that you have, so that you can say, okay, what are we doing? Even a basic question is, when do we get out of a trade? If we're getting in here, when do you plan to get out of it? And so you're relying on a stockbroker or a financial planner that might have 150 or 200 different clients to keep track of all that. Yeah, that's pretty tough. Unless they have a system that allows you to do that. I don't think it's something you can just outsource anymore. And these are things I've talked about throughout, some of my episodes in this. But anyway, hopefully this helps in that. And as I gain more information about these percentages, because all you ever hear from people who do technical analysis is, you want to go with the odds type of thing, but nobody ever tells you the odds or how they came to it. And I come from a background again of working with companies and their data, so I'm skeptical about what data it is that they're looking at, and you would think there would just be mountains of information on something like this. And, maybe I always had the assumption that my fiduciary or my financial planner keeps track of this stuff. They don't. You have to do it. You need to kind of step up your game in order to ensure that your investments are going the way that you want. Nobody else cares as much as you. Anyway, that's what I wanted to cover this week. And remember, there's always a better way.